Okay, Bismillah ar-Rahman ar-Rahim. Let's start with the today's session. And in this particular session today, we are going to practice for the final account, as we have definitely it's a crash course, and we are rushing off with the time. So it's better to have a smart approach rather than the detailed approach. So we are moving smartly now, and today we are going to have a question that is related to the final account. One more thing, that is in section C, you all know that there are three topics that is usually tested. Number one, the final account question. Number two is for the consolidation, and third one is for the ratios. These three topics are compulsory or mandatory tested in section C, and these are very important topics. So you have to prepare yourself a lot for these practices, for these questions, or for these areas. Today we are going to practice with the final account, and one more thing, that is you can take it as an advantage or the disadvantage, that final account is like a summary of all accounting standards. It means once you will be practicing for the final account questions, basically you will be revising all of your standards, all of your calculations, and all of your previous standards. So it's a positive side, and sometimes it's a negative one for those who are not well prepared for the standards. So basically they face a lot of problem in this particular area, that is the final account. So make sure that you are having a very good knowledge of different standards, different accounting standards, so that you'll be able to attempt that particular question. So let's start with the final account topic, and we'll try to practice that how the examiner would be asking a question and how we're going to attempt the particular question. So we'll be starting that particular area. First of all, let's read out the question. Let's read out the data, that what information is given over here, and then we will try to solve that particular question, and we'll discuss that what could be the possible strategy to attempt that particular question. So let's read out the question first, and then we will move on. Okay. First of all, the question, in that particular question, the data that is given, uh, the following is an extract from the trial balance of Gibraltar Company as at 31st October 2003. First of all, you need to highlight or identify that what is the accounting period. Accounting period is ending on 31st of October 2003. Okay. Now, there is a trial balance that is given over here. That is the land, building. One more thing, that is the investment, and in investment, that is IFRS 9, which we have already discussed in the previous chapter or the previous lecture. That is fair value through PNL. It means they have valued one of the investment at fair value through PNL. There is another investment in which they are using the fair value through OCI. Are you getting my point?
Yes.
Okay. There's a share capital balance at 1st November 2002, share premium balance at 1st November 2002, revaluation surplus investment at 1st November 2002, and then there's a retained earning balance, that is the opening retained earning, revenues, cost of sales, distribution cost, admin expenses, and other income tax expenses. So these are the information that is given in the trial balance, and there are few adjustments. Remember, there are 7 adjustments. On the left hand side, examiner will be providing you with the adjustment, and on the right hand side, examiner will be asking you for the requirements. It means on the right hand side of the upper pane there will be a requirement, and on the left hand side there will be a full-fledged question. So there are certain adjustments. Let's look at out and try to understand those adjustments. In October 2003, yes, obviously in the period of accounting year, in that particular accounting period, company received 3,50,000 from a customer for arranging the provision of maintenance service. It means customer paid 350,000, and this has been recorded as a revenue. Customer paid 350,000, and this was recorded as a revenue. Company does not provide the maintenance service itself, but instead uses the third party. It means the company for which we are doing the accounting says that we do not provide the services directly. We are basically providing the maintenance services and uses a third party. It means we are providing the maintenance services on someone else's behalf. Companies retain 12% of the amount received as a commission and pays the balance to the third party 1 month in arrear. Yes, can you please identify from which standard this adjustment has been taken?
Revenue.
Yes, very good. IFRS 15, that is from the revenue. And from which area it's being taken from?
The agency part.
Very good, nice. So we'll try then how to solve this one, but let's move on again. The year end of the company inventory, the year end inventory count was performed a day earlier. It means inventory was counted just one day before the reporting date. That is on 30th October. Instead, it should have been calculated on 31st of October, but staff calculated the ending inventory on 30th of October and was correctly recorded in the draft trial balance. It means inventory is accurately calculated. And where is the inventory? Inventory, where is the inventory? Is there any inventory, merchandise inventory?
Mm,
Yes, it's there, but it's hidden in the cost of sales. Am I right?
yes.
It means merchandise inventory is already recorded in the cost of sales. Okay. Now, what it says that recorded in the draft financial statements, merchandise inventory at 30th October was correctly recorded, but on 31st October, company made a sales of 12035, which means at 30th October there was a closing ending inventory, and now on the very next day, that is the first 31st October, that is the reporting year end, company sold $12035, which were also correctly recorded, which means company recorded a sales, that is the sales of $12,035, and the inventory record was not updated. It means company has already recorded a sales of that particular amount, but in the inventory was not updated. Inventory was not updated with that amount, which means that $12,035 was sold, but that is not yet been adjusted. Company applied a mark of 30% of these goods. During the year ended 31st October 2003, one of the fair value through P&L investment. Can you understand the word fair value through P&L?
Yes.
So there is another investment that is measured as per the fair value through P&L, which had a carrying amount of 62,000, which means there was an investment and the carrying amount of that investment was 62,000 and was sold for $59,000, which means there was a investment valued at 62,000 was disposed of for 59,000. The proceeds have been deducted from the year-end balance of these investment. It means the amount of proceed means that is the 59,000. 59,000 that you have received is already been deducted from the investment. However, any gain or loss on disposal not have been recorded in the administrative expenses, which means any gain or loss arising from the disposal or from the fair value will be recorded in the admin expenses. The remaining investment is classified at had a fair value of 184,300 at 1st October 2003, which still needs to be recognized, and any gain or loss on revaluation should be recorded in other income. Should be recorded in other income. Now, here in this case, there's an investment which is measured at fair value through P&L, and one of the investment has been disposed of for $59,000. That is the sales proceed, and the value of investment was 62,000. Such disposal, the proceeds have been deducted from the year-end balance of the investment, which means the proceed means that is for 59,000. $59,000 have been removed from the investment. The remaining investment, whatever the leftover investment is classified as fair value at 184,300. That is the fair value of the remaining investment at 31st October, which still need to be recognized. Any gain or loss on revaluation should be recorded in other income. It means if we are recording a gain or loss on revaluation, should be recorded in other income. Okay, fourth point, the fair value through OCI. It means you can just evaluate that there are approximately two adjustment from the IFRS 9. There are
Yes.
basically two adjustment from the IFRS 9. The fair value through OCI investment includes a purchase made during the year. The cost of $8,000 associated with the purchase were charged to the admin expenses. Always remember that if we are incurring any additional cost or direct cost in case of fair value through OCI or through amortized cost, remember such cost should be added up in the value of investment. which means that 8,000 was related to the that 8,000 was related to the that $8,000 were related to the initial direct cost or the direct expenses,
Transaction
and
cost.
yes, transaction cost, and this should have been capitalized. This should have
Yes.
been capitalized. But what the examiner did, that associated with the purchase were charged to admin expenses, it was treated as an admin expenses, which means the amount of admin expenses is not correct. At 31st October 2003, the fair value through OCI investment was 1,24,750, which is still to be recognized. It means there is the fair value already given, so we are going to account for this one. Fifth, company made a decision to measure the land and building at fair value for the first time. At first, 31st October, the fair value of the land was $1 million and the fair value of the building was $7 lakh. No adjustment has been made in reflect to the revaluation of to the related deferred tax. The relevant tax rate is 21%. This adjustment is from where this adjustment has been taken.
Tax.
And
IAS.
yes,
IAS
IAS, which
16.
very good. It's from the IAS 16. There is a testing of revaluation surplus. Okay, let's move on. The share capital at 1st October 2002 comprised 1,800,000 ordinary shares of $0.5 each. On 1st Feb 2003, company made a 145 right issues for $1 per share. The market price of the existing shares prior to the right issue was $1.60. No adjustment have been made with regard to the right issues. It means if we are doing the right issues, there are certain steps that we need to account for, and then we can issue the right shares. On 1st September, the company declared an ordinary dividend of $10 per share to all existing shareholder. This was paid on 30th September 2003 and was recognized in the suspense account. Always remember, we recognize the accounting treatment on the basis of accrual, which means that if you are going to pay that amount on 30th September 2003, it's irrelevant for me. It's not necessary or required. So this was the overall question from the last attempt, that is the final account. And let's read out the requirement of this question, that what actually the examiner wants. If there is any confusion related to that one, please let me know.
Not.
Okay, now requirement is, that is, you need to prepare the profit and loss, that is the income statement. You need to prepare the statement of changes in equity, and there is another requirement, that is basic EPS. You need to calculate or recalculate the basic EPS. Let's first try to solve the first requirement, that is the income statement. Now, how I'm going to do that one? For my habit is that whenever I see a requirement, what I do, that I make a format of that particular question. For example, if it states that we need to calculate the revenues and expenses, we need to calculate the revenues and expenses for that, or we need to calculate the income statement. For that, we need two line item, that is the revenues and expenses.
Okay.
So what I'll be doing, I'll be making a full-fledged format, and then I'll be putting the values over there. And then we arrive at the profit, that is known as what? Gross profit. And
Mm-hmm.
then we will be deducting the variable cost,
Okay.
or we can say that the operating expenses.
Okay.
Now, here in this case, there are expenses that is divided into different categories. Number one is the cost of sales, that is the cost of goods sold. We can say that it's a cost of goods sold. Then we arrive at the gross profit, and then we could have operating expenses. But here, instead of using the operating expenses, the examiner has used the word distribution expense or distribution cost.
Okay.
There is another, that is the admin expenses or admin cost. Once we did it, there will be a resultant, and that result in is known as what? Profit from
Operating cost.
operations. Yes,
Okay.
profit from operations. And then we will deduct interest expense. Then we will arrive at the profit that is known as what? PBT.
Profit before tax, less tax.
Yes, yes, profit before tax, and we're gonna to deduct the, and then we will
Profit after tax.
yes,
Net
net
profit
profit,
is the same.
net profit, or we can say that PAT. PAT stands for profit
Profit
after
after tax.
tax. So that is the income statement which I have drawn. Now what I have to do, I have to put just the values that is being given over here. And second thing is, if there is any adjustment, I need to adjust those informations as well. Okay, let's start. Let's start with the first adjustment.
Okay. The first adjustment. I've taken a picture while you were
Okay, you have taken the
showing the
picture.
questions. Yes.
Okay.
So 1st October received 350,000 from a customer for arranging the
Yes.
provision.
Yes. Whether
That
that
is the agency.
yes, whether the sales or the revenue should have been recognized with the amount of 350,000.
No, it should not have been recognized as 350,000. We should have recognized only 12%.
Yes, we should have recognized the revenue with the amount of what? The 12%. Is it?
Yes.
So what we have to do now?
350,000.
The company has already recorded the amount of revenue with the amount of 350,000. Is it?
Yes.
Now what we have to do that? What we
We
have
need
to do?
to subtract
Very good.
308,000.
Very good. So how we gonna to do that one? We first of
I've
all,
done.
yes, first of all, the revenue that is given over here in the income statement is 3765505. Is it?
Yes.
Okay. One more thing that you need to understand and you need to remember, every time, every time you will be using the formulas. You will be using the formulas. Are you getting a point?
Okay.
And in order to calculate the formulas, always use equals to sign.
Okay.
Okay. That is the revenue which is given over here. Now, what we have to do, we know that that revenue is not correct. Am I right?
Yes.
And 350,000 should not be recorded. So what we will be doing? What we will be doing?
Less.
Will yes, subtracting 3,50,000,
Yes.
and the revenue that should have been recognized is the 12% of
Only
350,000.
12%.
Yes.
Yes.
So we can, what we can do, we can directly 3,50,000.
Times 12%.
Yes, times 12%. Is it?
Yes.
Is this formula is clear to you?
Yes.
So that is going to be the updated revenue. Am I right?
Yes.
So that is the sales revenue. That is the sales revenue as per the first adjustment. There's a possibility. There is a possibility there might be some other adjustment as well. But so far, that is the first adjustment we have already adjusted. That what we did, we just recognized the commission revenue instead of recognizing the total revenue or the total sales. Are you getting a point?
Yes.
Okay, now let's move on towards the second requirement, second adjustment. Can you please read and let me know what is the problem over here?
Uh, yeah, and another person. We need to record the last day of inventory, which has
Yes,
already been recorded, but
the
no,
inventory is already being adjusted, but one day inventory is not yet adjusted. Am I right?
yes. Yes.
And one day inventory means the inventory that was on 31st October was sold out. Now the major problem is there is no head of account for the inventory. Am I right?
Yes.
And we know that the inventory is hidden in cost of sales.
Yes.
Yes, inventory is always there in the cost of sales, which means if the cost of goods sold, if the cost of goods sold is 2446577, so that is the cost of goods sold. That is the cost of goods sold. That is the cost of goods sold. And always remember the relationship between the merchandise inventory and the cost of sales. The relationship between the merchandise inventory and the cost of sales is basically an inverse relation. Which relation?
Inverse relation.
Why? Because merchandise inventory is treated as a revenue. And whenever we recognize a revenue, whenever we recognize a merchandise inventory, automatically the cost of sales would be declined. Are you getting the point?
No.
Let me give you an example for this one. For example, if I am having a merchandise opening, I'm having a merchandise opening of let's say 2000. I'm just giving an
When
example
you're
for this.
telling me merchandise opening, what is this opening inventory?
Opening inventory or merchandise opening is basically an
Okay.
expense nature.
Okay.
Merchandise opening or merchandise inventory or inventory, that is the opening balance. Then we had a net purchases of let's say 4000, and then we had a merchandise ending or merchandise inventory or ending inventory, that is let's say 1000.
Okay.
Now what will happen that if I just want to calculate the cost of goods sold, so I know that in order to calculate the cost of goods sold, there are three main components: opening, net purchases,
Yes.
and ending. Is it?
Yes.
So in order to calculate it,
5,000.
what we'll be doing, we will having a sum of all. Is it?
Yes.
So it's 5000. But for instance, if I just change the value of ending inventory, I am increasing the value of ending inventory, like let's say 2000. So once I did that, what happened? The cost of goods sold is reduced. Can you see that one?
Yes.
So which means if you are increasing the merchandise inventory or ending inventory, then the cost of goods sold is being reduced.
Yes.
That's why we call it as an inverse relation, indirect relation.
Okay.
And suppose that if I'm reducing the amount of inventory, I am making it as like 500.
It will be increase the cost of goods sold.
Yes. Are you getting my point?
Yes.
So here in that particular adjustment, there's an inventory. There is an inventory that was sold out, and it was sold for $12035. Remember, it's a sales price. It's a
Sales price.
Yes, we sold it for $12,035, which were also correctly recorded. However, inventory was not updated. Now, what we have to do, remember, always the inventory is being recorded at the cost price. At what
Yes.
at what value we record inventory?
Lower of
Yes,
cost.
lower of cost or NRV. And majority of the time, which value is lower?
I don't know.
Cost.
Okay.
Normally the cost would be lower. Otherwise, if the cost is not lower, it means business will be running at a loss.
Yes.
For example, if I would say that my mobile phone, the cost of that, as this is my inventory. If I would say that the cost of that mobile phone is, let's say, $200, and the estimated selling price is $250, that sounds good. That the cost is $200 and the selling price is $250. That is the NRV is $250. So it means at times normally the cost would be lower. Are you getting a point?
Yes.
So which means the company made a sales of $12,035 and we sold that inventory. Now, just let me know, if we just sold that inventory, what we have to do? We need to remove the inventory, true or false?
True.
And if we will reduce the inventory, then the cost of goods sold would
Will
be,
increase.
yes, it means what we will be doing, that sale of inventory will be adjusted over here, and this should have been added up. Am I right?
Yes.
This should have been added up. This should have been added up, but this should not be added up to at the value of 12,035, because that 12,035 is the selling price. Am I right?
Yes.
So we need to calculate the.
Cost.
Very good. Can you please let me know how we're going to calculate the cost of that one?
The 12,035 is 130%. We need to calculate at 100%.
Nice. So what would be the formula for this one?
12,035 divided by 130 times 100.
In times 100. Nice. Very good. Divided by 130. Is it?
Yes.
That is 9257.
Yes.
Are you getting a point?
Yeah.
So this should have been added up. This should have been added up.
Yes.
Okay. Now what we are doing, we are doing the working of cost of goods sold. There could be any other adjustment. There could be an adjustment. But let's hold it out. Let's read the another adjustment. Is this adjustment is completed now?
Yes.
Yes. Now let's move on towards the third adjustment. During the year ended 31st October 2003, one of the fair value through PNL investment. Fair value through PNL investment. Let me check it out. Yes, here it is. Here it is. Can you see that one?
Yes.
That is 1,78,400. It's talking about that particular investment. The fair value through PNL investment, which had a carrying amount of 62,000. It means in that particular, you can just please give me a second.
Yes.
अस्सलाम वालेकुम। वालेकुम क्या लिखा रहे थे? नहीं नहीं नहीं, क्लास ले रहा था। हुकुम? नहीं नहीं, क्लास ले रहा था। क्लास नहीं, बोल बोल हुकुम। हाँ, मुझे नाम बता। नाम बता। हाँ राबी। मैं थोड़ी देर में चेक करके तुझे मैसेज करता हूँ, ठीक है? मैं करता हूँ। ओके। Okay, there's an investment that is fair value through PNL, and it had been which had a carrying amount of $62,000, was sold for $59,000, which means out of the total investment, we disposed of one investment, and the value of that investment was 62,000, but it was sold for $59,000. Is this statement is clear to you?
Yes.
Now the proceeds have been deducted. Proceeds means the value at which we sold it. That is 59,000.
Yes.
The value at which we sold it, that is the proceeds. The proceeds have been deducted from the year-end balances of these investment. It means the investment value which is over here, in that particular value, proceeds, the amount of proceeds have already been deducted. The amounts of proceeds have already been deducted from the year-end balances. However, any gain or loss on disposal should have been recorded in the end. However, any gain or loss on disposal should have been recorded. Now, what we have to do, we need to recognize the gain or loss on disposal. Where?
Yes.
That is in the administrative expenses. The remaining investment in this classification had a fair value of 184. Now, first thing that we need to do, the investment which is given in that particular question, investment which is given here, the value of investment that is given over here is 178,400.
Yes.
178,400. That is the investment which is already given over here, and this is the updated one. Reason being, it's saying
They
that
have
it
already deducted
already been deducted.
59,000.
But please let me know that they have accurately or appropriately deducted. Is there anything that we need to account for?
The gain or loss has not been recorded.
Yes, one thing, that is 178,400. From this value, they have already deducted 59,000. Although
Yeah.
they should deduct 62,000. Am I right?
Why?
Why? If we are having an investment of 62,000 and we dispose of that investment, or which had a value of 62,000, So we need to remove it from the investment at the value of 62,000.
Okay.
Let's take an example for this one. Let's take an example. If I have an asset for, let's say, $20,000, and I disposed of one asset which had a value of 12,000. I disposed one asset which had a value of 12,000. So how much amount should be deducted over from here?
12,000.
12,000. For example, the asset which had a value of 20,000 and one asset that was disposed of, that value of that disposed asset was 12,000, but company disposed it for 10,000. So whether I'm going to deduct 10,000 or the 12,000?
12.
Yes, that is the same mistake what the examiner or the accountant did in that particular scenario. It already he already deducted that 59,000. Instead, how much amount should have been deducted?
62.
Yes, 62,000 should have been deducted. So now what we have to do, is this the correct investment amount? Is this the updated investment amount?
No, it's not good.
So it means what we have to do, we have to add back
Less.
or we have to less. We
Less
have to,
3,000.
yes, we need to less the, and that is basically the gain. No, that is basically the loss. Am I right?
Yes.
And what amount should be deducted? That is $3,000. Is it?
Yes.
Okay, now let's calculate the remaining. Let's calculate the remaining. Let's calculate the remaining investment amount. It's 175,400.
154. Yes.
That is the remaining investment. It's basically the remaining investment amount. Now what we have to do, what it says that remaining investment, yes, we just reached at that remaining investment classified at fair value of 184,300. It means now that investment is
There has been a
valued at
revaluation.
184,300. That is the fair value of that investment. Fair value of that investment. Now let me know whether the value of investment has been increased or decreased.
Increase 8900.
Yes, it's been increased from 8 9, and that is known as what? Fair
Fair
value
value
gain.
gain.
And this will be recognized in P&L. Am I right?
This will be recognized in P&L.
Just look at that information that I have highlighted right now.
Yes.
Are you getting a point? Do you remember that one? If you are making an investment, and if we are making an investment and we are using the fair value through P&L, which means the gain or losses on the fair value will be recorded in P&L.
Yes.
So that is the gain on loss on disposal that should have been recognized, and this will be recognized, and this will be recognized.
In P&L.
Yes, in other income.
Which one?
That 8,900.
Yes, as other income.
Yes.
Okay.
Are you getting a point?
But in profit and loss itself, not in other comprehensive income.
No. It should be in the profit and loss because
Yes.
this is a fair value through P&L.
Yes.
Okay. Let's move on to another requirement. That is the fair value through OCI. The investment. There's an investment and purchase during the year. The cost of $8,000 associated with the purchase were charged to admin expenses. Whether the transaction cost should have been charged to,
should have been capitalized.
yes, this should have been capitalized. This should have been capitalized, which means the investment amount that is given over here in the trial balance is incorrect. Am I right?
Yes.
So far, the amount that is given over here is 1,20,000.
Yes, 120,000.
120,000. So what we'll be doing? That is the investment
120,000.
fair value OCI was
Yes.
1,20,000. Is it?
Yes.
Now, what went wrong? What went wrong? What went wrong?
They should have capitalized
How much amount?
8,000 more.
Very good. And therefore, what we have to do? What we have to do?
Add transaction.
Yes. With the amount of?
128 of the investment.
Great.
128,000.
128,000. Now, what it says that at 31st October, the fair value of OCI investment was 1,24,750. Now what we have to do first, let's calculate the total of it.
128, and then we see if we get a gain.
Very good. That is the remaining, or that is the total investment. Total investment. Now, what went wrong? That the fair value at the end of the reporting date is one two four
124,
seven
750.
five zero. 124,750. Now, let me know whether the value of investment is increased or decreased.
Decrease.
Yes, it's been decreased by 3250. It means it's a fair value loss, and such loss will be recognized in.
OCI.
Yes. Are you getting a point?
Yes.
Now let's move on towards the fifth requirement. Company also made a decision to measure the land and building at a fair value for the first time. It means that is the first time we will be recognizing that land and building at the revalued amount. Okay.
Okay.
At 31st December or 31st October 2003, the fair value of the land was 1 million. Let's work it out all together. Land. The cost of the land is
1 million.
no, the cost.
Oh, we need to go upstairs.
Yes.
Land 800,000
8,000,
and
800,000.
yes.
800,000 is the value of land, is it?
Yes.
We just wrote it down over here. Okay. Now, what is the building? What is the building's
Building
carrying amount?
476,000.
Yes, building. The value of the building is 4,76,000. Is it?
Yes.
Now, we have just jot down the values of the land and building. Now, what it says that uh, company has valued for the first time at 31st October, the fair value of land was 1 million. It means the fair value or the market value,
Value 1,000.
1 million.
Yes.
1 million, and the fair value of
200.
the building was,
700,000.
that is 700,000. Now,
Both has increased.
yes, both the amount are increasing, is it?
Yes.
And there's a revaluation surplus.
Gain. Okay.
Yes, revaluation gain or revaluation surplus. So that is, we can say that it's a revaluation gain or
Or surplus.
revaluation surplus. Is it clear?
Yes.
Okay, now what we have to do, that the gain is over here, but what it says one more thing, that no adjustment have been made in reflect of the revaluation. Okay, we'll do that. We just do that. We will update the revaluation balance. But what
Mm-hmm.
it says, or the related deferred tax, it means deferred tax is not yet been recorded. Always remember, we calculate the deferred tax at its we calculate the deferred tax we calculate the deferred tax on revaluation, but this will not be charged. Am I right?
Yes.
This not be charged to PNL. Any revaluation, any deferred tax on revaluation will be charged to revaluation surplus. Let's calculate the total revaluation. Total
Total
revaluation would
revaluation
be,
is equal to 200,000 plus 224,000.
yes. Is this the correct value?
Yes.
Now we'll be calculating the deferred tax.
Rate 21%.
21%. So 89040. Is it?
Okay.
89040. That is what? That is what?
That is the deferred tax.
Yes, that is the deferred tax liability. That is the and remember, the deferred tax on revaluation will not be charged to PNL.
Okay.
Now, if I just make entry of this one, that what would be the entry? Revaluation surplus debit and deferred tax liability credit. Am I right?
Yes.
Is this the same? Is this the entry correct?
Deferred tax
Yes.
liability. Yes.
Yes. Are you getting a point?
Yes.
Okay, now let's move on towards the sixth requirement.
Share
The share
capital.
capital at 1st November comprised 1800,000 ordinary shares of $0.5 each. Point 0.5 is the par value. On 1st February 2003, company made a 1 for right issue for $1 per share. The market price of the existing shares prior to the right was 1.60. No adjustment have been made for the right issues. Now we have to calculate the shares. First of all, if we are supposed to calculate the number of right shares or the value of right shares, first of all, we need to identify that how many shares do we have. At 1st November, company comprises of 1800,000 ordinary shares. It means there are 18 lakh shares.
Yes.
That is 18 lakh. Now, the company has decided to issue right shares for 1 for 5. It means every 1 for 5, every person who held 5 shares will get the 1 shares. So multiply by 1 divided by 5. It means company will be issuing 3,60,000 right shares. Company will be company will be issuing 3,60,000 right shares. Is this working is clear to you?
Yes, for every 5 shares, they will get one additional.
Yes. For every 5 shares, they will get the one additional shares. So it means company will be issuing 3,60,000 ordinary shares, 3,60,000 right shares. Now we need to calculate the value. We need to calculate the value. In order to calculate the value, let's look at the par value. Let's look at the par value. And the par value is 0.50. Look at the par value or the accounting year end on 31st October. And if we look at the par value, that is 0.50.
Working 6. Note 6.
Yes, 0.50. Now what we are going to do, we are just going to calculate the value. So how are we going to calculate the value? 3 lakh
360
60
times 0
in
decimal 5.
times, that is 1,80,000.
Okay.
And what is that 1,80,000?
Uh, we have get the money, right?
Yes, that is the monetary value of the right shares. That 3,60,000 is the right shares to be issued, and that is the par value, and that is the value of right shares. Are you getting a point?
Yes.
So we'll be issuing $1,80,000 right shares. Now, seventh adjustment, the last one. The company declared an ordinary dividend of $0.10 per share to all existing shareholders. This was paid on 30th September 2003 and was recognized in the suspense account, which means the dividend is paid to the all shareholders. Dividend is paid to the all shareholders, and the amount of dividend that is given over here is 0.10 per share. 0.10 per share. Can you please calculate the amount of dividend?
Okay. So we need to get all the number of shares,
Yes, you need to get all the number of shares.
which was in the trial balance. It is written the value over there 9. No, it is share capital. It's not that. 1,800,000 plus. Mm,
The share capital that is already given is 900,000.
yes, but it's
And
a value.
yes,
We take the 900,000 divided by 0.5 to
Yes.
get the
So
number of shares.
yes. What are the number of shares? 18 lakh.
Yes,
18 lakh, and the number of right shares that we have issued is 3 lakh 60,000.
yes,
And the dividend is given at the rate of 0.10.
yes.
So the value of dividend would be
198,000.
not at all. Remember, listen to me very carefully. Right shares to be issued, that is 3 lakh 60,000, and we are going to write shares issued at 1 lakh 80,000. That is the par value of the shares is this one. Now, one thing that you need to account for, that if you want to calculate the dividend, what we have to do, that we need first of all the ordinary shares. Existing number of ordinary shares were 900,000. No, 900,000 is the value, and the par value is 0.5, which means the ordinary shares would have been, that is 1 lakh 80,000. Am I right?
Yes,
It means we have already 1 lakh 80,000. But now what we did, that we have issued 3 lakh 60,000 right shares. Am I right?
yes.
Which means now the total number of shares do we have? Total number of shares do we have is 21 lakh
2160.
60,000,
Yes,
and the dividend will be given on that particular shares.
216,000.
Yes, rate of dividend was 0.1 per share. So let's try to multiply with this one. So 2 lakh 16,000 is the amount of dividend. Is it clear to you?
Yeah.
So far, we have done with all the adjustment. Now, it will not take a lot of time to draft the P&L completely. What we have to do, just need to copy paste. Is there any adjustment in the cost of sales?
Yes,
Yes. And have you done this? Have you done with this one?
yes, we have already worked out that.
We have already done with that one. So what we are just going to have a sum for this one. That is the cost of goods sold, and we are going to take that value to the P&L. Always remember, whenever you take that value to the P&L, always relate with the cell. Always create a link with the cell.
Okay.
So how are we going to do that one? You just point out the cell number 2455835. Which cell number in it?
J6.
J6. That means what I'm going to do, we'll go to the cost of sales equals to, I would type J6. It will automatically select that cell.
Okay.
Are you clear with this one?
Yes.
Okay, now what will be the gross profit? How are we going to
Revenue
calculate it?
less cost plus profit.
Yes, always try to use the formula like I'm doing.
Okay.
So now, is there any distribution cost? Is there any
No.
distribution cost?
Yes.
Yes, there is a distribution cost, and that was already given in the question.
116. Yes. 166.
Double one six one six
6166.
six. Is there any adjustment in the distribution cost?
No.
No, we just had a full question. We just reviewed that full question, but we didn't find out any adjustment. So we are going to add it or subtract it.
Yes.
Yes, and what will be you doing? We'll be using the minus sign just before the value,
Okay.
so that once you will apply the sum formula, it will already be deducted. It will automatically be deducted. Okay. Do we have admin expenses, admin cost?
Yes, we have it in the question.
We just write it down in the Excel formula or in the Excel in that particular format. Is there anything that we need to account for in the admin expenses? Could you remember? You have read the question. Could you remember that? Is there anything to adjust in that particular?
No, for admin cost. No.
For admin cost, I think it's
Yes.
yes.
Yes. We have it for the
I couldn't remember for this one. What was that?
Um,
Yes, this one. Fourth adjustment.
the transaction cost.
Yes. What the examiner did, that examiner recorded that 8,000 in the transaction, 8,000 in the expense, which means that admin expense is overstated or understated.
It has been overstated.
So what we have to do, whether we have to increase it or decrease it.
We need to less
Very good. And we need to less with the amount of what?
8,000.
Is there anything with related to the admin expenses?
No.
Read that paragraph. Number 3.
Yes, the disposal. However, the loss which has been created has been recorded as administrative expense.
Yes, what it says that the proceeds have been deducted from the end balances. However, any gain or loss on disposal should have been recorded in the admin expenses, which means any gain or loss on disposal should have been recorded in the admin expenses. But it clearly states that any gain or loss on revaluation or any gain or loss had not been recognized. It has not yet recorded the gain or loss. So it means that we need to recognize the gain or loss. So just let me know the investment that is fair value through P&L was disposed of. Is there any gain or loss?
Just scroll a bit down. It's here. It was L number. It's number 2. There is a gain.
There was a loss. There was a loss. You just look at this one.
Yeah, there was a loss.
Yes, there was a loss of $3,000.
Yes.
So it means we are going to account for that $3,000. How are we going to do account for? Whether to add or subtract?
Admin less.
It's a loss. It's a loss. Whether we need to add or subtract, whether we need to increase the admin cost or reduce the admin cost.
Increase the admin cost.
Yes, we need to increase the admin cost. So we'll add up that particular loss. Are you getting my point?
Yes.
So anything else with the admin cost? No, there is no as such other thing in the admin cost. Uh, there is no as such adjustment. So the total would be 122,73713. That is the admin. One more thing, that admin cost will be deducted. Am I right?
Yes.
So in order to deduct it, what we'll be using? We'll be using the
Bracket.
minus, yes, at the start of the value. So this will automatically appear in negative sign.
But the amount has changed, right?
Amount has changed? Not at all.
Yes. Take the minus in front of the 12,000.
Is it correct now?
Yes.
Okay, now let's calculate the profit from operation. We'll simply type the formula sum and we'll select all of these three values. So we just got the answer 762,791. Is it clear to you?
Yes.
Okay, one more thing that we have to do. One more thing that we have to do. That before adding up or before deducting the interest expense, we always have a other income as well. Is it
Yes.
other income? Is there any other income in the trial balance that is already given?
Yes. 15, 15, 1.
15, 15, 151. Is it?
Yes.
Now, what we have to do, is there anything that would be that would have an impact on the other income? Let's try to have this one. In the first paragraph, we have already accounted for nothing to do again. Is it?
Yes.
Okay. In the second paragraph, we have already accounted for the inventory, and there is nothing to do again.
Yes.
True? In the third
Yes.
year, there was a fair value through PNL and we disposed of, but the 3000 was not recorded. We have already recorded, and there was a fair value. Yes, there's a fair value gain. There's a
There's the fair value gain in working to
yes. There we go. There we go. Here we go. That is the
G13
yes. There is a fair value gain, and the value of that fair value gain was.
8900.
So it means the other income should have been recorded with the 8900. For that, I'll be linking the cell. Now there are two expenses that are left out. Number one is the interest expense. Is there any interest expense that is given in the question?
In the question, right? No.
And whenever we use the income tax, whenever we calculate the income tax, we all know that there are three types of taxes. Am I right?
Yes.
There are three types of taxes. Number one, the first type of the tax is the current tax.
Yes.
So working seven, we are going to calculate the tax expense. First of all, if we just look at the trial balance, there is income tax for the year ended 31st December 2000 and 31st October 2003.
Yes.
What is this?
Opening,
No,
closing balance.
this is
No.
the
The amount the current paid.
yes, it's a current tax. It's a current tax. And what we have
It
to
is
do?
on debit side.
Yes, it's a current tax, which means the income tax, the first component of the income tax, that is the current tax, which is 4,28,000. 4,28,000. Okay. One more thing. Is there any other adjustment related to the tax
We got a deferred tax, but it is on revaluation, which will not be recorded.
which will not be recorded? Very good. It means we have a deferred tax on the revaluation, but this will not be charged to P&L. Instead, it will be debited or charged to revaluation surplus account. Are we clear on this one?
Yes.
So what we'll be doing, we'll be directly typing that amount, that is 4,28,000, and it's in J47.
Junaid, sorry.
Yes.
When we were doing questions on tax, when they gave us the trial balance and it was in the debit side, it was known as an under provision, right? And then we had to add it to the current tax which is being paid right now.
Very
No?
good.
Okay,
Yes.
but it's not given here in the question, right? The amount which is being paid for this year.
Yes, it's not given over here. Let me. Okay, now let me give you an understanding for this one. Whenever we solve a question, there is always given a under provision or the over provision. Here in that particular situation, just read the requirement, just read the data. Income tax expense for the year ended. Income tax expense for the
For the year
year
ended.
ended. It means that is the income tax that is given for the year. Are you getting a point?
Yes.
It's not the current tax or the prior tax. It is basically the tax for the current year. That is a tax for the current year. So
Okay.
there is only the current tax is given. If there would have been the deferred prior tax, so it means the word only the taxation would have been written, and it could either be on the debit side or the credit side.
Okay.
Now what we are going to do, that is total, and how we are going to do total, that is sum bracket open.
Yes.
So that is the profit before tax of 343. Oh, what I did.
But we have already put income tax down, right?
Sorry, I just entered that value in the wrong head.
That's okay.
Okay. Interest expense. Do we have any interest expense in that particular question?
When you're telling interest expense, you're meaning finance
Yes, I
and
I do mean that finance cost, interest
okay.
expense, or we can say that's a finance cost. Is there any finance cost in the
No.
question? We no, there's no. So it means it will be considered as zero.
Okay.
Now let's calculate the net profit. How are we going to calculate this one? Sum, and from profit from operation I'll be adding.
We need to do D10 plus D11 less
That is
D40.
okay. One more thing that we just made an error, that is the other income that we have written down over here, that is 8,900, but we just forgot to add up the other income that is already given in the question, that is 15151.
Mm,
Is it
yes.
15151 plus this? Are you getting this one?
Okay.
So that is the other income 24051, and then we have no interest expense. So the profit before tax would be, oh, so that the profit before tax is 786,842, and then we deducted the income tax, so we have a profit of 358842. Is it clear to you
Yes.
now? One thing that you can do in your exams, that you just select the values at the end, and you can remove the decimals, you can remove the,
Decimals.
yes, if you want to. Otherwise, if you don't want, it's perfectly fine. It's perfectly fine. Are you getting a point?
Yes. All the workings need to be done on this sheet itself, not on the paper that is given in the exams.
Yes. Try that you perform majority of the working in that particular sheet, rather than on the rough paper.
Okay.
Are you getting a point? This one. Okay, I just
Yes.
made something random. Okay, forget about this one. Okay, so that is the net profit which we have calculated, and the requirement, if you just look at the requirement of this question, that we need to prepare the income statement, which we have already done. Now, what we have to do, that is to prepare the statement of changes in equity. And how we going to do prepare the statement of changes in equity? How we going to calculate or prepare the statement of changes in equity? Let's see. Oh, but first, what happened over here?
Mm. Just try to enlarge the column of D.
Sorry.
Just try to enlarge the column of D.
No, I just tried it, but I just what I did.
Oh, I think it's no. Yeah, maybe this number
Yes.
left.
Mhm.
There's undo on the sheet.
Sorry?
There's undo on the sheet. You may undo what you have
No,
done.
no, it's not doing that. It's not working over here right now.
Oh,
I think it's better now. Okay. Yes. So we just wanted this one. It was income tax. We have no interest expense, and the other income was that is
15,151. Add.
15,151. Add this one, is it? And the profit from operation was this. Okay, and then we have profit before tax, and this will come by the addition of both. And then we have a sum formula. Is this was the answer? 3588. Yes, it's fine now. Okay, now that is the net profit which we have already calculated. Now what we have to do, that is to prepare the statement of changes in equity. How are we going to prepare it? For a statement of changes in equity, we need to account for that what account balances related to the equity we are already having. So let's try to evaluate from the trial balance first. The first is the share capital. The second one is the share premium. The third one is the revaluation. And the fourth one is the retained earning. So far, we can see that there are 4 account balances in the trial balance. Is it?
Yes.
So we are going to prepare a few columns over here. The first column would be for the share capital.
Okay.
And the second column is for the
Share premium,
share premium.
revaluation, surplus,
And then revaluation surplus. And then retained
retain
earning.
earnings.
Is it?
Yes.
So these are the columns which we have prepared. And now we're going to put the balances, that is the opening balances,
Okay.
or we can say that the balances at 31st October 20x3. So the
Okay.
balances that are given over here, that is the capital opening balances. Sorry, it's not 1st October, it's 1st November 20x2. 1st of November 20x2. So the share capital balance was 900,000.
The share capital was 900,000. Share
900,000
premium
was,
500,000.
and the revaluation surplus was
Revaluation is 32,514.
32,154, and the balance on the retained earning account was
436.
436 436,607. Is it?
Yes.
Now, what we have to do, that any changes that arises in between that particular accounting year, what we have to do, we need to account it for. Let's quickly evaluate. Is there any change in the equity during the period? For this, we
No.
need to account for the adjustment one. There is no impact on that one. Is it?
Mm-hmm.
In the second adjustment, no, there is
No.
no as such adjustment that
Yeah,
could
yes.
hit. Here it is. Now here it is. How it could be? No, how it could be? It's a
The
fair value through PNL.
revaluation.
It's a fair
Oh,
value
not
through
this one,
PNL.
the other one then.
Yes, it's not this one. Reason being, because that the fair value or the gain or loss will directly be recognized in the PNL.
Yes.
So here we go. Fair value through OCI. Here the gain or loss on revaluation should have been recognized in the statement of changes in equity. Am I right?
Yes, the loss.
And
I think there was a loss.
there was a loss. Let's see whether your thinking is
3250.
perfect. Yes, it's 3250. Is it?
Yes.
Which cell number it is? Which cell number it is? J20.
J20.
Okay. Now what we are going to do? Whether the J20 revaluation surplus balance would increase or decrease?
Decrease.
Yes. So we just referred that cell J20. Are you getting my point?
Yes.
So it means that is the downward, it's a downward revaluation of investment.
Mm.
That is fair value through OCI. Is it?
Yes.
Okay. Any other thing? Any other thing? That is fifth
Yes.
adjustment. Yes, there is a
Share which
uh
have been increased.
yes,
Number
there
of
is an
shares.
upward revaluation. Is it?
Yes.
There is an upward revaluation of building and land. Am I right?
Yes.
And the upward revaluation was with the amount of what?
Excuse me, Junaid. Do
Yes.
we add land and building together or land one
Uh,
line and building other line?
you can right now write down the values in a cumulative way. There's no need to write it down two times. Yes, it's a doable thing, and you can do it. If you want to write it down line by line, that is for the land first and for the building again, it's completely fine. You can do it.
Okay.
The two values are there. That is M25 and J25. M and J25. Am I right?
Yes.
So M25 plus J25. Is it clear?
Yes.
Okay, now one more thing. One more thing that we know that any deferred tax on the revaluation will be charged or debited to the revaluation surplus account. Am I right?
Tell me again.
Any revaluation on the any deferred tax on the revaluation. Any
Yes.
deferred tax
The
on the
deferred
revaluation.
tax should have been deducted from the revaluation.
Yes, that should have been deducted from the revaluation. So what was the amount of deferred tax revaluation? We have already calculated. That was 89,400. Am I right?
Yes. J29.
89,040. Yes, 89,040.
Yes.
J29. J29. So whether going to add it or subtract it?
Less.
Yes, J29. We just deducted. Okay, one more thing. One more thing. Deferred tax on revaluation, we just adjusted, and let's move on towards the any other adjustment. Yes, another adjustment is that we issued right shares. Can you see that one?
Yes.
Okay, right shares. Let's have a proper calculation for this one, and let's make an entry for this one. Let's have a proper calculation for this one.
We already did the calculation.
Yes, it's oh yeah. Let's make an entry for this one again. If you have issued the shares, definitely bank will be debited,
Yes.
and that is three lakh
Credit.
sixty thousand
Yes.
in times 1.60.
Why one?
1.60.
Okay.
Because we have issued 3,60,000 3,60,000 shares, and we have issued their shares at a value of 1.60.
Okay.
No, but we have no, we have issued their shares for $1 per share. Right? Look at this one. We have issued these shares for $1 per share. Is it?
Yes.
So it means we have issued 3,60,000, and the shareholders will be paying me $1 per share. So it means I'll be receiving $3,60,000,
Yes.
and the share capital would be credited. Is it?
Yes.
And share capital is always recorded at the par value,
The
right?
per value is 0.5.
Yes, and the par value is 0.5, and the remaining amount would be
Share
the share
premium.
premium, and this is
Okay.
going to be 3,60,000, and again point in times 0.5.
Okay.
So in this particular case, when we are issuing the right shares, what's going on that the share capital, the amount of share capital is being increased, and the amount of share premium is also increased. Am I right?
Yes.
And this has been increased by 1,80,000 and 1,80,000. M34. M34, M34, and for share premium is M35. That is what the issuance of right shares. Is it clear now?
Yes.
Okay, now we have also declared a dividend of 0.10 per share, and we have already made a calculation for this one that what amount of dividend we are going to pay. That is 2,16,000. Is it?
Mm-hmm.
And the cell number is J43.
Yes.
And can you recall the entry for the dividend? What is the entry for the dividend?
Debit retained earnings.
Yes, debited the retained earning. And if you are debiting the retained earning, it means if you are debiting the retained earning, it means retained earning would be increasing or decreasing.
Decreasing.
Yes. So it's J43. We will be deducting J43 will be deducting from the retained earning.
43.
43.
Yes, you have put 46.
J43. Now that is what the dividend. Any other adjustment that is left out over here?
No.
No. So let's have a total for this one.
Okay.
And let's have a total for all of these columns as well. That is what the balance is. That is what the balance is at 31st October
X3.
20X3. Is it clear to you now?
Yes.
Is there any problem?
No. Is a presentation, does a presentation count in this paper? Because when I
Sorry?
was doing this, when we were doing this at school level on
Yes.
paper, I know
Yes.
that the presentation was marked. Even the presentation.
Doesn't matter. Doesn't matter. The first thing is that you need to focus is the completion and the completion of answer. That if you have
Okay.
completed the answer, that is the first priority or the primary responsibility, the primary task that you have to do. It's secondary to have a good presentation. Okay, one more
Okay.
thing. One thing that we have just forgot, that is the profit for the year that we need to transfer to the retained earning. Profit for the year that you need to remember. Profit for the year. Profit for the year. How much amount of the
Oh,
profit was there?
okay.
It was
Uh,
D15, is it?
D15.
Yes,
Yes.
D15. So D15 that would be included in the retained earning. Are you getting a point?
Yes.
So that is the profit for the year that we need to include in the retained earning. So the first task is that you need to complete your answer, and then once you are done with that, and if you think that there's a time in the exam, so definitely you can have work on the presentation side.
Okay.
Even we can have a sum of all, that is the total of, we can have a total column. Are you getting this one? So
Yes.
this could be easily done.
Okay.
So that is the statement of changes in equity that we have prepared over here. So this was the question from the final, and this is the recent attempt question. This is the recent attempt past paper question in which the examiner was asking the final account question. Final account. Okay, one thing that you need to remember whenever you have a question in the section C, always remember examiner would be asking you. Examiner would be asking you for the question, and whenever you will read the question, even once you will practice for the past papers, if there are 5 or 6 or 7 adjustment, there, and remember, always remember, there would be only 1 or 2 adjustment that would create a trouble for you. Otherwise, majority of the adjustment you will be able to solve it. So never panic in exam just because of that particular one or two adjustment. That one or two adjustment could not be the failure, could not be the reason for your failure. And that one or two adjustment should not be the reason for your failure. So you have to be very confident that whenever you're going to attempt any final account or consolidation question, so you need to remember, you need to be very focused that if any of the adjustment you are not supposed to do, or you are not able to do that one, or you're not able to understand that one, there you should not panic in the exams. You should not panic. If you don't know that adjustment, just leave it out. Don't worry about this one. Whatever you have, whatever the knowledge you have, and whatever the adjustments you are having, and you are having a very good grip, just try to attempt and put the impact on that particular answer, or just put that effect on the P&L or the balance sheet. Don't be panicked just because of those one or two adjustments. Are you getting the point?
Okay. Yes.
This is the strategy of the examiner to confuse the student, or to double mind the student, that let them put examiner will always try to put you in trouble, but you have to be very confident. You have to be very confident.
Okay.
Are you getting the point?
Yes.
If you just look at the question, that is the last attempt. This is the recent question. If I would say there could be a one adjustment that could have make you in trouble, and it could either be, for example, fair value through OCI or PNL, I guess. Otherwise, it was a very normal question. So,
Yes.
so you always try. So you always try to attempt the question. Always try to attempt the question and never get panic in attempting those questions, whether it's a question of the final account or the ratios of the consolidation.
Okay.
Are we clear on this one?
Yes.
So that was from the final account, and in that particular standard, different adjustments were tested. Different adjustments were tested.
Okay.